MIRAI Corporation Overview of 8th Fiscal Period. MIRAI Corporation listed on the REIT market of the Tokyo Stock Exchange in December 2016. It's been a tough sailing through the rough waters of the market. However, MIRAI was back on a growth trajectory, leveraging on the underlying strength of Mitsui & Company, Japan's leading general trading company, and Idera Capital, which has the value-adding capability for real estate. In 2019, MIRAI continued to take proactive corporate actions, including JCR's upgrade of rating outlook to A+, the first ever M&A endeavor as a white knight in J-REIT history, and continuous PO and external growth. Just as MIRAI was about to step on the gas to achieve its expanded midterm management plan, Repower 2020 ER, which is targeted for the end of 2020, the outbreak of COVID-19 occurred. New challenges confronted MIRAI. Section 1. Impact of COVID-19. As a diversified J-REIT, MIRAI invests in a variety of assets, mainly in office, retail, and hotel. About half of the portfolio consists mostly of large offices with middle-range rents in the Tokyo metropolitan area with solid demand. They are highly sought-after assets acquired through sponsor support. Retail portfolio consists of assets with high intrinsic real estate value, including urban retail focused on experimental consumption and mixed-use assets with office, together with community-based assets focused on consumption of goods. While hotels are mainly budget-type hotels to meet business travel demand, MIRAI has also invested in some variable rent assets that target the upside from inbound demand. The spread of COVID-19 and the slowdown in economic activity from March 2020 onwards have had various effects on the assets under management. In the office sector, an increase in the number of tenants introducing teleworking has had no impact on rent payments, except for some visit-type offices and restaurants located inside large offices. On the other hand, business closure requests due to the Japanese government's declaration of state of emergency and voluntary restraint of travels, business trips, and events have had a significant impact on the operations of retail assets and hotels. In addition to variable rent from hotels being lost mostly, MIRAI received many requests for rent abatement and reduction due to the suspension of businesses. When tenants asked for rent abatement, MIRAI listened carefully to the requests of each tenant, in line with requests from the Ministry of Land, Infrastructure, Transport and Tourism, and the Financial Services Agency, while considering the impact on DPU as much as possible. Measures such as the temporary utilization of security deposit for non-payment of rent and short-term rent reduction, combined with future recovery plan, were introduced. In the forecast for 9th fiscal period and beyond, MIRAI has factored in the impact of rent reduction requests and the risk of decline in lease business revenue due to measures taken in anticipation of the post-COVID-19 market. In the hotel sector, MIRAI conservatively expects recovery of inbound and domestic travel demand and assumes no variable rent until the end of April 2021. Variable rent at hotels began to be affected from February 2020, when COVID-19 spread in Japan, and MIRAI implemented 2 measures to maintain DPU. The first is the acquisition of assets utilizing the acquisition capacity. At the end of March 2020, MIRAI acquired two assets, a mid-sized office and an urban retail asset whose profitability significantly exceeded that of the existing portfolio. Hiroshima Rijo Dori Building is a mid-sized office building located in the Otemachi zone, which is home to government offices and offices of major corporations. Renovation was performed over multiple years, and therefore it has superior competitiveness against the surrounding properties. MI Cube Sendai Cliffs Road is a retail asset located on a shopping street within walking distance from Sendai Station. The demand for the asset as shops is solid, as it is located in highly flourishing area. The upper floor's tenant is rental co-working office space that reflects the current trend. The second is securing capital gain from partial disposition. MIRAI disposed a partial stake of Rokko Island DC, which is a new type asset with high degree of cash flow stability, to a demonstration fund of the digital security project that was newly formed by Mitsui & Company Group. While disposition gain of 61 million yen minimizes the decrease of DPU from the impact of COVID-19, MIRAI aims to promote the digital transformation of its asset management operation in mid to long term through participation in the project. Prior to the outbreak of COVID-19, MIRAI was steadily growing DPU in line with the goals of the midterm management plan, and the actual DPU for the 8th fiscal period was almost unchanged from the previous fiscal period, at 1,561 yen. The initial forecast of DPU for the 8th fiscal period was 1,570 yen. A drop in hotel occupancy on the back of COVID-19 resulted in variable rent being much lower than originally expected. On the other hand, MIRAI took two countermeasures. The acquisition of assets utilizing the acquisition capacity through debt and the partial disposition offset the shortfall to bring the DPU back almost in line with the initial forecast. From the 9th fiscal period, MIRAI factored in the risk of decline in lease business revenue due to the impact of COVID-19 and announced a conservative forecast, including zero variable rent from hotels for the time being. In the 9th fiscal period, the DPU will decrease from 1,600 yen before the outbreak of COVID-19 to 1,380 yen. And in the 10th fiscal period, when the disposition gain from Miu Miu Kobe is no longer recognized, the DPU will be 1,150 yen. Section 2. MIRAI Revitalization Plan. MIRAI formulated the expanded midterm management plan, Repower 2020 ER, in December 2018. In order to achieve two quantitative targets of DPU and lowering risk premium, active corporate actions were steadily taken, such as proposing to merge with another REIT as the first white knight in J-REIT history, and acquiring assets with ongoing public offerings. Unit price, which is indicative of market valuations, had also performed well above the market average since June 2019, but fell sharply after the outbreak of COVID-19 due to concerns about hotel occupancy and other factors. MIRAI has suspended midterm management plan targeting for the end of 2020 and will begin implementing portfolio revitalization measures with post-COVID-19 market outlook in mind. Formulated MIRAI Revitalization Plan starting from now until mid-2021. MIRAI focuses on 3 challenges that surfaced from the impact of COVID-19, namely, conversion of Hotel WBF Yodoyabashi-Minami to office, further renewal of Mi-Nara, and portfolio reconstruction, including potential asset replacement. MIRAI will solidify the base for DPU recovery and growth in line with generation of variable rent from hotels, which is expected after 2021. MIRAI Revitalization Plan 1. Conversion of Hotel WBF Yodoyabashi-Minami to office. Hotel WBF Yodoyabashi-Minami is a budget-type hotel in central Osaka City, which was acquired in November 2018. Its occupancy remains sluggish due to the decline of inbound tourists stemming from worsening Japan-Korea relationship and large supply of new hotels in central Osaka area. While MIRAI has considered measures including change of tenant, as well as conversion of usage to other asset type before the outbreak of COVID-19, the tenant has filed for a bankruptcy protection under the Civil Rehabilitation Law in April 2020. Given the solid fundamentals of Osaka office market, MIRAI decided to convert the asset to ready-to-use serviced office, based on the judgment that it would capture the new demands of the post-COVID-19 market. The new name of the asset is Mix Yodoyabashi, a nod to the idea of combining respective strengths of MIRAI and Idera to mix up the property value of the asset. Increase of revenue in line with the investment amount is expected after the conversion, and MIRAI is working on the project diligently, which is expected to be completed in early 2021. MIRAI Revitalization Plan 2. Further renewal of Mi-Nara. Mi-Nara is a retail asset in Nara that reopened in April 2018, after its acquisition in October 2017, following a renewal led by property manager Yamaki. Even after the renewal, the asset continued to face difficulties in attracting inbound demand in Heijo-kyo area, where it is located. Measures to improve sales showed steady progress through increased asset managers' involvement in operation, and attracting global brands such as Toys R Us and Burger King. However, it was derailed by outbreak of COVID-19. In MIRAI Revitalization Plan, while the concept for the asset as tourism-oriented retail property will be maintained, MIRAI aims to renew the asset to a retail property that matches the post-COVID-19 market. While further strengthening the asset manager's involvement, MIRAI will implement fundamental restructuring plan based on the 3 pillars of review of operational structure, review of tenant mix and inbound tourist strategy, and consider cooperation with new third-party partner. MIRAI Revitalization Plan 3. Portfolio reconstruction including potential asset replacement. Prior to COVID-19 outbreak, the portfolio composition was 50% offices, 20% each retail properties and hotels, and 10% others. In principle, MIRAI's policy was to control the balance of asset types through new acquisitions. However, MIRAI will now implement portfolio reconstruction, including potential asset replacement, while paying higher attention to defensiveness, aiming to construct a portfolio that matches post-COVID-19 era. In terms of individual asset types, acquisition of hotels is suspended for the time being, and portfolio composition may be lowered. While focusing on highly defensive logistics and land assets, and data centers whose demand is expected to increase, MIRAI also plans to invest in office and retail properties by individually assessing their post-COVID-19 era adaptability. The forecasted DPU for the 10th fiscal period is 1,150 yen, as the disposition gain of Miu Miu Kobe will be stripped off. Following the completion of revitalization plan and recovery of hotel variable rent, stabilized DPU is expected to be mid-1,300 yen. MIRAI will focus on revitalization plan aiming for early return to growth path. MIRAI faced an unprecedented crisis of COVID-19. MIRAI will continue to take more proactive corporate actions than ever before, including the implementation of the MIRAI Revitalizing Plan and active pursuit of digital transformation, and so on. MIRAI's challenge continues with a view of the post-COVID-19 new normal. To be continued.